Hello, I'm Donald Leggett, and welcome to the latest Focus IR CEO interview. I'm joined by Adam Davidson today, and he's the CEO at Trident Royalties. Trident is a fast-growing, diversified mining royalty company listed on AIM and the OTCQB, and it's managed by an experienced team of mining professionals. Welcome, Adam.
Thank you.
You said you hope to announce a number of royalty deals in the second half, and now we have 2 in 2 weeks, Adam. Let's start with the lithium royalty deal in the Paradox Basin, which has just been announced.
Yeah, sure. No, we're pretty excited about this one. As you know, it's hard to get good lithium royalty exposure. We've got a tier 1 royalty in Thacker Pass, which is under construction now in Nevada. And so we're pretty excited to get this one over the Paradox Basin. A couple aspects to this one that I think make it particularly interesting. One is that it's a very advanced stage project. They published their definitive feasibility study last year. So that's usually sort of the last big comprehensive study. And now they're doing their FEED study to sort of refine those aspects. That's expected to be done by the end of this year. And really from there, the next step in a project life cycle is to make the decision to commence construction and to source financing to build the project. So it's at a good stage in its life where you can see sort of the pathway to cash flow from the royalty holder's perspective. The other couple things worth flagging is this is a lithium brine project. In particular, it's direct lithium extraction. So the brine is pumped out of the ground, sort of flows through a series of tanks where a resin collects the lithium. This is a different style of lithium recovery relative to our royalty with Thacker Pass or the other brine projects that you see in South America and elsewhere. So we like having the different styles of lithium extraction within the portfolio. It's a bit of a hedge, particularly because DLE has the potential to be pretty disruptive in the general lithium sector. So like to have some exposure to an asset in the US that's this advanced. The final thing worth flagging is just the transaction structure. I think we were able to pull together something that's pretty attractive from our perspective, such that in headline, it's a $10 million transaction, but only $1.5 million is paid up front to secure the royalty. Everything else is sort of linked to production milestones. So first royalty payment and announcement of commercial production is the second tranche, which would be $3.5 million, up to $3.5 million. And then the third and final tranche for up to $5 million is 2 years after the second tranche. So a pretty attractive structure from our protection where we secure the exposure to the royalty without a major cash outlay up front. And then once those milestone payments, if and when they come due, you're obviously more than happy to pay them because you've got a nice cash flowing lithium royalty in your pocket at that point in time.
Okay, your portfolio is pretty strong on battery metals already, so perhaps you could give us a nod to that, and then explain how lithium brine and the direct lithium extraction process, how that recovery process adds to the strength of your portfolio.
Yeah, I touched on it very briefly, but I suppose to give a bit more detail, at the moment, lithium brines, they're pumped into big evaporation ponds. They've got a big footprint. They're not particularly the most environmentally sensitive type of projects. They're very water intensive, as you can imagine. Whereas the DLE extraction methodology, you can pump it out through a series of wells. So it's a much smaller footprint on surface for one thing. And then the water is run through, or the brine is run through various tanks where you have resins that attract the lithium. So then you could pull out that resin, sort of wash the lithium off of it. And then the brine is effectively pumped back to where it was. So environmentally much friendlier, and then much lower cost as well. I think about 35,000 tons of lithium were produced last year from DLE, and that there are quite a few projects in construction at the moment. So DLE has the potential to be disruptive, as I mentioned, in that if this is a methodology that sort of takes over the lithium space, it has the potential to really lower the price profile and increase production profile of the lithium sector to meet some of those demands. So from our perspective as Trident within the portfolio, we've got a nice, solid, substantial project in Thacker Pass with an offtake from General Motors. So we're sort of hedged that the material it has at home, regardless of what happens, and it's a tier 1 project. So we're very comfortable with that exposure, of course. So to then add this DLE exposure, and most DLE projects as we stand today are in China. So to have one in the US that's this advanced, that's being advanced by a well-capitalized Australian-listed public company. We just think it's the right blend within the portfolio to give us good, comprehensive lithium exposure.
That is very interesting, isn't it? Okay, staying with lithium, what's the latest update on the Sonora lithium royalty?
Yes, we put out an announcement. Ganfeng, the operator of that asset, flagged that the Mexican government had effectively revoked 9 of the key licenses of the project. As a bit of a reminder, we don't own that royalty as of today. We put down effectively a deposit in the form of a loan, such that we have a synthetic option to acquire up to half the royalty. The reason we structured it that way was twofold. One, there's litigation risk, and then political risk. The litigation risk is the validity of the royalties being challenged in court, so we needed to see that resolved before we would actually pay across the consideration amount to buy half the royalty. And then we knew, obviously, that there was political risk. Mexico had previously nationalized lithium licenses, but it was only applicable to new licenses. But the risk, of course, is that this would creep and eventually cover Sonora. So we don't know where this will lead exactly. We suspect that it's a very challenging project for the Mexican national lithium lithium company to have developed themselves. So we suspect that there's still an angle there for Ganfeng, and that this is an action to maybe bring them to the table and make concessions to the Mexican government. That's speculation on our part, I suppose. From where we stand, we've got an option. We're happy to sort of ride that option and see how this situation develops. But if it doesn't move in the right direction, we can call back our $2.5 million and move on with sort of nothing lost.
Okay, which takes us to Dandoko. On 21st of August, you acquired a 50% interest in a 2% royalty for the Dandoko Gold Project in West Mali. So who did you buy that from, and how is that deal structured?
Yeah, it's similar to Paradox in that we bought this from private individuals, and we tried to structure it in a similar way. I mean, you could probably get a sense of what we're doing here. We want to make our balance sheet stretch as far as possible and get as many royalties into the portfolio, because it's tempting for a royalty company to go out there and just pay cash for these things. Certainly that's what the counterparties would prefer. But with Paradox, we were able to make it stretch pretty considerably by having those tranches linked to milestones. Similar with Dandoko, the individuals we bought this royalty from, we had 60% of the consideration paid up front, but then 40% of the consideration isn't linked until the royalty commences paying. So there's a second tranche once it commences paying, and then a third and final tranche once we as the royalty holders have received payment on 500,000 ounces of production, which is a significant amount. So I think that the structure was pretty attractive there for us.
You obviously weren't too worried about jurisdictional risk in West Mali, obviously.
It's obviously a factor, of course. Frankly, if this asset was located in the U.S. or Australia, you'd be paying multiples of what we pay today to get the royalty. So it factors into price. We price in that risk naturally. I suppose from our perspective, you want some exploration exposure in your portfolio. It has the ability to add significant value over time as they add more ounces to the ground and ultimately go into production. That's a real catalyst for value within the share price. So you want some of that exposure in there. The tricky thing with buying exploration stage royalties is to find an operator that's big enough and well funded enough to really advance the project, because there are many juniors that have good exploration projects, but they're out there sort of drip feeding funding as they need to go and circle in and raise within the markets continually to try to advance their project. So the benefit with this one is that B2 Gold is a circa $4 billion market cap company. They paid quite a bit of money to pick up this property. They've invested quite a bit of money already to date. I think it was $6.6 million just in the first half of this year to drill out Dandoko. Now they're putting in roads to that property and another property. I think they slated $16 million for that, and that's under construction. So they're allocating quite a bit of capital and obviously see a lot of value in this ground. The reason they're doing so is because they operate the Fekola mine, which is their largest asset. 600,000 ounce a year producer. I think it's the third largest mine in Africa. So you could see where there's a pathway for this one to be in production, which is kind of rare for an exploration stage royalty. That's why we were so attracted to it. So despite being in Mali, we feel that B2 Gold, it's their most important asset. It's also an important asset to the country of Mali. So I think they're best positioned to sort of navigate any disruptions in that country. And then, as I said, for an exploration stage royalty, it's got a very clear path and very attractive very attractive land package, a very large land package that we think we can see quite a bit of value from in the future.
Okay, my final question. You previously told us that market conditions are good right now for people like yourselves for acquiring royalties. So let me ask, where do you source your deals and how do you keep that quality deal flow coming?
Yeah, so I mentioned these last couple of deals were from private individuals, which is a little bit uncommon. We've done that before, but it can take some time to source these style of deals. Yes, I suppose it's really a blend of what we've done to date. You know, when you look at our portfolio, we've acquired royalties from closed-end private equity funds that have a fixed fund life and need to monetize. We've bought from private individuals. We bought from mining companies that hold royalties over projects that they no longer own, but they owned at one point in time and retained a royalty when they sold it. And then finally, there's the opportunity to primary finance, whereby we're providing capital directly to the mining company to advance their project. So I can comfortably say we continue to look at projects in our pipeline that cover all four of those sort of baskets. And I think there's different dynamics in the mining cycle that play into each of those. Clearly, for primary financings, the mining sector is soft, the equity markets are soft. So it's an attractive time for us to deploy capital directly to the project operators because they need capital and they don't want to go out there and raise equity at their current share prices. But also has a knock-on impact that mining companies that hold royalties, they've got that similar problem, sort of monetize assets that sit off balance sheet and bring some cash in that way. That's more attractive for them. And it even ripples through to private individuals that are obviously involved in the mining sector, and they feel that softness in the market. So to get cash out of assets that they hold within their personal portfolios, similar story. So it's as you say, a good opportunity for us, and I think that's being laid bare by the deals we've done this year. Just did the small Quale mineral sands transaction, Preciosa silver royalty, Dandoko gold royalty, and now the Paradox lithium royalty, and hopefully quite a bit of work ongoing. So hopefully good news to come in the future.
So it's been a good year so far. Do you expect more deals to come, Adam?
Yeah, we're certainly working hard on it. You never say never until we get there and sign on the dotted line. But yeah, we're finding that the counterparties are pretty open to transact. So it's a cyclical sector, and when we think we're in the right spot of the cycle at the moment.
Okay, Adam Davidson, CEO at Trident Royalties. Thank you very much indeed. That was terrific. For more company information and to access the company bulletin board, please go to the Trident pages of London South East and add Trident to your watch list. And meanwhile, do follow us on Twitter. That's at @_FocusIR_. Thank you very much indeed for watching.